Short seller Hindenburg Research putting out a market-moving call on Adani Group. It's the family-owned businesses of Asian billionaire Gautam Adani.
Adani Group's shares are in a free fall, declining for the second straight day after US short seller Hindenburg Research's scathing report on the conglomerate.
अमेरिका की एक इन्वेस्टर एक्टिविस्ट रिसर्च फर्म हिंडनबर्ग रिसर्च की एक रिपोर्ट के बाद आज अडानी ग्रुप के शेयरों में भारी गिरावट देखने को मिली। ये रिपोर्ट ऐसे समय आई है जबकि अडानी एंटरप्राइजेस का 20,000 करोड़ का एफपीओ खुल रहा है।
Hello guys. Welcome back to the one more interesting case study of Adani Group, one of India's largest conglomerates with a collective market capitalization of 17.8 trillion rupees, that is $218 billion. Adani Group is the second largest conglomerate in India, run by its chairman and founder Gautam Adani, who is the third richest man on earth, previously having reached the second spot. The group has 7 key publicly listed equities with a collective market value of about 17.8 trillion rupees. It also includes a maze of Adani private companies and family trusts. Through their holdings in the group, Gautam Adani and his family have amassed a paper fortune of over $120 billion, with over $100 billion of that coming in last 3 years, largely through the meteoric appreciation of its stock prices. The conglomerate is involved in a wide array of businesses, largely focused on key infrastructure projects like ports development, mines, airports, data centers, power generation. The company was doing good and every investor was happy with Adani Group stocks as they have given very good returns in last 2 to 3 years. But unfortunately there is a huge shock for investors and for Adani Group recently. Hindenburg Research Agency has published a report on Adani Group saying how the world's third richest man is pulling the largest con in corporate history. A report by Hindenburg Research alleged accounting frauds, stock manipulations and money laundering by the Adani Group. We will discuss what Hindenburg report contains and what all are the allegations on Adani Group. Before we start, if you are new to the channel, please subscribe and press the bell icon for regular updates. Firstly, we start with what is this Hindenburg agency and why everyone is taking this report so seriously and started selling their stocks, which created an impact on Adani Group shares. Hindenburg Research was founded in 2017 by Nathan Anderson. The company is named after the 1937 Hindenburg airship crash that took place in Manchester Township, New Jersey, USA. It is written on the website of the firm that it monitors man-made disasters. Let us tell you that Hindenburg Research detects the disturbances happening in any company and then publishes a report about it. It is a forensic financial research firm that analyzes equity, credit, and derivatives. So next is the why everyone so serious about this report. Because Hindenburg track record is such that it has proven other companies' fault. For example, in 2020, it has published a report on Nikola which created a buzz in the market and impacted the Nikola. We will not go into detailed report of Nikola. If you are interested, you can check the link in the description published by Hindenburg on Nikola. To understand the Hindenburg report, first we will understand how Adani stock performed in last 3 years and how it has created $100 billion for Gautam Adani. If you see the returns of the company, it is a huge return. Just have look at the percentage of returns over last 3 years. Even before examining the evidence put forward in this report and based solely on financials taken directly from its companies, the Adani Group appears to be highly overvalued. We will go through some of the allegations published in the report. We will discuss only major allegations on Adani. For detailed report, click the link on the description. The Hindenburg Research report on Adani Group was a critical evaluation of the Indian conglomerate's business practices, financial performance, and management. The report made several allegations against Adani Group, including 1. Presenting evidence that the 17.8 trillion Indian rupees $218 billion Indian conglomerate Adani Group has engaged in a brazen stock manipulation and accounting fraud scheme over the course of decades. Below are the statements made by Hindenburg. Gautam Adani has a net worth of roughly $120 billion, adding over $100 billion in the past 3 years, largely through stock price appreciation in the group's 7 key listed companies, which have spiked an average of 819% in that period. Its research involved speaking with dozens of individuals, including former senior executives of the Adani Group, reviewing thousands of documents, and conducting diligence site visits in almost half a dozen countries. Even if you ignore the findings of our investigation and take the financials of Adani Group at face value, its 7 key listed companies have 85% downside purely on a fundamental basis owing to sky-high valuations. Key listed Adani companies have also taken on substantial debt, including pledging shares of their inflated stock for loans, putting the entire group on precarious financial footing. 5 of 7 key listed companies have reported current ratios below 1, indicating near-term liquidity pressure. Next allegation is the group's very top ranks, and 8 of 22 key leaders are Adani family members, a dynamic that places control of the group's financials and key decisions in the hands of a few. A former executive described the Adani Group as a family business. In the past, Adani Group has previously been the focus of 4 major government fraud investigations which have alleged money laundering, theft of taxpayer funds, and corruption, totaling an estimated $17 billion. Adani family members allegedly cooperated to create offshore shell entities in tax haven jurisdictions like Mauritius, the UAE, and Caribbean islands, generating forged import-export documentation in an apparent effort to generate fake or illegitimate turnover and to siphon money from the listed companies. Gautam Adani's younger brother, Rajesh Adani, was accused by the Directorate of Revenue Intelligence, DRI, of playing a central role in a diamond trading import-export scheme around 2004 to 2005. The alleged scheme involved the use of offshore shell entities to generate artificial turnover. Rajesh was arrested at least twice over separate allegations of forgery and tax fraud. He was subsequently promoted to serve as managing director of Adani Group. Gautam Adani's brother-in-law, Samir Vora, was accused by the DRI of being a ringleader of the same diamond trading scam and of repeatedly making false statements to regulators. He was subsequently promoted to executive director of the critical Adani Australia division. Publicly listed companies in India are subject to rules that require all promoter holdings to be disclosed. Rules also require that listed companies have at least 25% of the float held by non-promoters in order to mitigate manipulation and insider trading. 4 of Adani's listed companies are on the brink of the delisting threshold due to high promoter ownership. Their research indicates that offshore shells and funds tied to the Adani Group comprise many of the largest public, i.e., non-promoter, holders of Adani stock. An issue that would subject the Adani companies to delisting were Indian securities regulator SEBI's rules enforced. As part of investigation, they interviewed an individual who was banned from trading on Indian markets for stock manipulation via Mauritius-based funds. He told us that he knew Ketan Parekh personally, and that little has changed, explaining all the previous clients are still loyal to Ketan and are still working with Ketan. Hindenburg have included 88 questions in the conclusion of our report. If Gautam Adani truly embraces transparency, as he claims, they should be easy questions to answer. We look forward to Adani's response. It's important to note that the allegations made in the Hindenburg Research report are just that, allegations, and have not been independently verified. Adani Group has denied the allegations made in the report. Now let's see the Adani future after Hindenburg report. It is difficult to predict the future of Adani Group after the Hindenburg Research report, as it depends on a variety of factors, including the company's response to the allegations, regulatory actions, and market conditions. However, here are a few potential outcomes. First is the continued growth. If Adani Group is able to effectively address the allegations and maintain its strong business performance, it could continue to grow and expand its operations in the future. Second is the financial fallout. If the allegations in the Hindenburg Research report are substantiated and lead to negative financial consequences for the company, it could result in a downturn in its stock price and a decrease in investor confidence. Third is the regulatory actions. If the allegations lead to regulatory investigations or actions, it could result in financial penalties, legal consequences, or restrictions on the company's operations. Fourth is the reputational damage. The allegations in the Hindenburg Research report could have a negative impact on Adani Group's reputation, making it more difficult for the company to secure funding, contracts, or partnerships in the future. Next, we will see the impact on ACC and Ambuja Cement. As you were aware, recently Adani Group acquired ACC and Ambuja. The impact we were able to see in these stocks as well. In Ambuja 16% drop and in ACC 13% drop on Friday. If the allegations lead to regulatory investigations or actions, it could result in restrictions on Adani Group's operations, potentially affecting the Indian cement industry and impacting the share price of ACC and Ambuja Cements. It will impact Indian banks as they have given huge loan to Adani Group, especially on PSU banks. Not only banks, it will impact the LIC as it is invested 72,268 crore rupees as Adani FPO for raising the capital of 20,000 crores. But because of the Hindenburg report, we have seen less bookings. Impact on Indian economy would depend on a variety of factors, including the size and significance of Adani Group's operations in the Indian economy, the response of the Indian government and regulators to the allegations, and the overall state of the Indian economy. How it's going to impact the Adani Group, investors, and Indian economy, we have to watch and see. Thanks for watching the video and please share your feedback in comments what you think of Hindenburg report and impact on Indian economy.